won't stop till I hear him say,
This market, if you're still listening to this trade breakdown, is so saturated. Everybody has it out in their minds that they're going to jump into this market and become millionaires overnight. This market is not meant for that. Alrighty, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, and foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, we are going to cover a GBP-JPY trade that I sent to the students in the GBP-JPY chat here at CYPRX. I'm going to show you guys when I gave my analysis to the CYPRX students, some things that I was telling them, and then also go over some of my screenshots you guys can see. From my MetaTrader 4 entry, I entered in at 161604, so roughly down here in this general vicinity. I'm going to break down from the 15-minute time frame perspective down into the fractal nature of things on the 1-minute chart, giving you guys all of my entry confluences and things of that nature. If you guys like video breakdowns like this, go ahead and smash that thumbs up button. We do appreciate it here at CYPRX, and it does help boost the YouTube algorithm. Regardless if you trade cryptocurrencies, commodities, or indices, or even maybe foreign exchange, you guys can utilize the technical analysis gems that I drop on this YouTube channel to give yourself the best edge in this market. Nothing that I constitute here is financial advice. Simply all I'm doing is giving you guys a strategy that I personally utilize to give myself an edge in these markets, giving myself the best bang for my buck, high reward, low risk trades. Okay. So a couple of these different techniques include tracking where previous banking institutions bought from. Now, personally, I've mentioned to you guys in past videos that I'm mainly a New York session trader. I like to take intraday positions from one session to the next, starting in New York session, looking for entry criteria during the New York session area of opportunity. So with that being said, what I like to do is focus and orient my attention where previous banking institutions bought from during previous New York sessions. So as you guys can see, I have my session indicator here, and you guys can see via these New York sessions, we have some other areas of interest where banking institutions during New York session purchased from. We have lows here where the banking institutions purchased from during this New York session, and that roughly rounds out to about the psychological level 161,500, which is a cycle level that we're going to pay attention to for this trade breakdown. So be mindful of that. And then same thing here, you guys can see how price action during this New York session got past price at a high. They manipulated price down into lows. They broke back above that psychological level where they bought from the previous day at roughly 161,500. They retested it, and then they bought price back up again. Okay. Now, coming into this New York session here where we placed this trade, something that I was being mindful of was, again, the piggyback methodology. By highlighting previous areas of institutional interest, we can identify where banking institutions bought from previous days. So taking my box tool from the candlestick body down to the wick and extending that over to the right-hand side, we can see that during this New York session on the higher time frame, again, we want to utilize the higher time frame to trade in tandem with what is taking place on the lower time frame to give us a better bang for our buck or a higher reward, low risk trade. Why? Because we know that the banking institutions like to trade off of the higher time frame. Now, the 15-minute chart is not necessarily a higher time frame for the banking institutions. We know that they like to trade in tandem with the monthly, weekly, and daily time frame. However, as intraday traders and as scalpers, this is a very predominant and important chart in my personal opinion. This is something that I like to utilize. I like to have, when I'm actually trading the live market, the 15-minute chart on the left-hand side of my charts and the 1 minute to maybe 5-minute time frame to get those sniper entries based off of the fractal nature of things on the right-hand side of my charts. So I like to utilize the split screen methodology. And again, that's another gem that you guys can pick up, utilizing the left-hand side of your brain in tandem with the right-hand side of your brain so that way you don't get manipulated. I'll give you guys an example. Utilizing the higher time frame, you guys can see that during this New York session, we waited to place buy positions. Why? Because during the manipulation window that I cover here on the YouTube channel, you guys can see that if I highlight the manipulation window, and I'll make this box orange for you guys, which is our manipulation box here at CYPRX, I tell you guys that prior to every single session, what takes place in the market? A manipulation window before the session starts. Well, here you guys can see prior to the New York session, we see early buyers in the market. What did the market makers do? They came and they attacked those early buyers, liquidating any people that were entering prematurely into this market and not understanding that the banking institutions are going to trade best off of the best discounted prices that they can get from where they bought from previous days. So if I take my Fibonacci from this A to be moved where the market broke a previous market structure New York session high. Okay, you guys can see where the banking institutions push price into discount in the form of taking my fib from the low to the high, properly drawing my Fibonacci on, and showing you guys those interesting Fibonacci discounted numbers of 66 to 79%. You guys can see that the banking institutions manipulated price down into lows and bought from a higher time frame discount at 79% for this New York session. So we can go ahead and we can utilize that as a confluence as to why we placed this trade. Trading in tandem with the 15-minute higher time frame discount was when the market came back down to this 161,500 level. So those were two of the confluences that we had here at CYPRX, was higher time frame discount and price coming back to the 161,500 psychological level where we bought from during previous New York sessions. We also see some manipulation tactics that we can avoid here at CYPRX, which was one, price got passed at a high during New York session where you guys can see that right out of the manipulation window, we broke higher. Price was not in a discount yet for the higher time frame, i.e. the 15-minute pullback, and we have early manipulation buyers. So we know here at CYPRX that 9 times out of 10, and I've shown you guys in previous examples, that those areas are going to get liquidated before the bank and institutions actually put in their overall order, which you guys can see is playing out now. So with that being said, let's jump down to the lower time frame, and I want to cover a message that I sent to the CYPRX students that you guys can see in the GBP JPY chat. I sent to the students ahead of time, like I do every single week, at least twice a week. I send the students my analysis before it plays out. Sometimes I send it to you guys on Twitter, and you guys that follow me on Twitter have been able to see that analysis play out right before your eyes. But I always send my analysis well in advance before the trade actually plays out, so that way you guys can see that I put my money where my mouth is. Well, if you guys pay attention to the time that I sent this message to the CYPRX students where I said, I will seek to buy if price can hold the 161.500 level. I sent them the message at 10:43 a.m. Here in California, you guys can see that my charts are set to Los Angeles UTC. Here, this arrow depicts where 10:43 a.m. is at. So you guys can see that I sent the message to the CYPRX students when price was on this retracement. Okay. Now, something else that I sent to the students the other day is that no student here in this CYPRX community should ever buy from a top again. With that being said, now that you guys can actually see when I sent that to the CYPRX students, I'm going to talk to you guys about what confluences I was seeing leading up fractally into this trading day, where you guys can see that my entry was at 161.604. So roughly here in this general vicinity, I entered in this bullish leg. With that being said, let's look at price action considering the confluences that we've already put into place. Number one, pay attention to this 161,500 psychological level, where we've already established that in previous trading days, that was an area of discounted price where banking institutions bought from previous days. So we highlighted that area here and we extended that over where you guys can clearly see New York session, manipulated price down into lows beneath 161,500, bought from a discount, broke back above that 161,500 level, retested it, and finished off their order, pushing price to a new high, i.e. on the 15-minute chart, all the way up here where this New York session sold off to push price all the way back down into discount where this New York session again bought off from in the form of that 79% retracement discount on the 15-minute chart that I just showed you guys. Okay. Now, something else to be mindful of now that we're piecing the confluences together, you guys should be writing these out if you're paying attention to this video. Number one, avoiding manipulation windows. Number two, trading in tandem with the higher time frame. Number three, making sure that we're respecting psychological levels in our technical analysis, understanding where the banking institutions bought from during previous sessions, understanding that if the banking institutions push back down into those sensitive areas and we see bullishness pick up, most likely we are going to be able to capitalize on high reward, low risk trades based off of what? The ideology that banking institutions like to buy from a discount at areas where they bought from the previous sessions. So with that being said, as soon as we break out of the manipulation window, we come for the liquidity beneath the lows that were set in place right before we break out of the manipulation window. The market comes and attacks those lows. I'll delete these psychological levels here just for 1 second. Before I do that, pay attention to the 161.800. As you guys can see in the MetaTrader 4 screenshot that I sent to the students ahead of time, when I entered into the trade, the 161.800 was my take profit area. You guys can see that I identified that to the student via this green line right here. So I'm going to go ahead and delete those for you guys. So that way my charts are clear and you guys can see price action good. So when we tapped into this 161.500 level, what can you see happened? Okay. What are some of the things that we go over on the CYPRX YouTube? Before we talk about the entry here in this area identified by this yellow box, what is something that we can give ourselves as an added confluence here that I teach you guys on the YouTube channel? Liquidity traps. Well, we talk about liquidity traps in the form of highs if we're seeking to take buy positions, and we're looking for lows to get swept here in this area. And we're looking for a bullish match of momentum to take place after that. Well, as you guys can see, without drawings on my chart, it's very hard to depict what is going on in the market. But as you guys can see, we understand that liquidity exists in the market in the form of money that you cannot see. With that being said, here's the low that we talk about consistently over and over and over again, waiting for the market to sweep that low and match with bullish momentum. If this was a proper bearish leg, okay, what would need to take place after that? A lower low. Now that a lower low has been created underneath this low, that would need to continue to a lower high, lower low formation. Well, guys and gals, you have to understand that the market right here gave you a signal without any indicators, without any volume, without anything like that. It gave you structure. What was that structure? The market did what? After it swept liquidity with this low here, sweeping this low here, it created a what in the market? A higher low that leads to a what? A market break in structure. You guys can see the liquidity trap that the market makers left behind in the form of retail resistance or a M formation or a double top pattern, where retail traders were most likely selling in the form of over leveraged positions above these highs. So we have a liquidity trap. This is something that I go over on the CYPRX course content multiple times, as well as on the YouTube. We see a liquidity trap to the upside and to the downside. We see a sweep of that liquidity. We see a market signal that the market does not want to create any lower lows and instead wants to create new highs after sweeping lows. This is a signal that the market makers are now involved. Buyers have overpowered sellers, and we are most likely going to see a market continuational move higher. With that being said, coming into my entry criteria, you guys can see down at the bottom of my charts where I sent that message to the CYPRX students that says if we can hold above the 161.500 level, I'm going to buy. With that being said, we got the same price action, guys and gals, here in this general vicinity. As you can see, again, what are the confluences that we look for? We look for a failure to break a psychological level. We look for the market to do what? Pre-engineer liquidity in the form of some type of retail pattern trap to the upside. While we're looking for lows to get swept from the market, once those lows get swept, we're looking for the momentum that swept those lows to either be matched with bullish momentum in the form of a complete market reversal or a market reversal that leads to a break in structure, either one. Once that happens, we're looking for a higher low to be established in the market after that sweep of liquidity that leads to a market continuation higher or a break in structure. Once that takes place, guys and gals, this gives us the green light to get the best bang for our buck, to understand that the banking institutions must add to their overall order. With that being said, we can then take our risk to reward tool and seek to enter on a retracement down here in this area once the market pulls back, knowing that the banking institutions cannot just take one institutionalized order sending price to new all-time highs. That is illogical. We know that the banking institutions have to add to their overall order to drive price higher. That is our goal as traders, to minimize our risk by putting our stop loss beneath lows and to target logic in the market from people that are attempting to sell when the market is respecting bullish order flow. With that being said, look at what we did here, guys and gals. Same pattern that we see here in this general vicinity. We waited for that to play out. As you guys can see, when I sent that message to the CYPRX students, price was here. We'll look at the pattern. If you guys can't see it, pause your charts or pause the video and make sure that you can identify it before I explain it to you guys. Here is a pre-engineered trap in the market in the form of a what? Either you can look at this in the form of retail trend line, where we see a 1, 2, triple touch of a trend line. I've explained that to you guys on the CYPRX YouTube, that the market makers are going to come back for that liquidity. Or you can look at this as a double top formation or an M formation in the market, where you can go on baby pips, or you can even find gurus on the market that charge you thousands of dollars that teach you how to trade these patterns, and they never work. Why? Because institutionalized traders do not trade these patterns. They trade against that in the form of building liquidity, sweeping lows, making new highs, breaking previous market structure. And now that those sound CYPRX confluences that I explained to you guys come into play, you guys can see where I sent to the CYPRX students, I will be seeking to buy if price can hold above 161.5 0.500. And as you guys can see, taking my fib from the, now let's pay attention to fractal structure. Where's the higher low after the sweep of liquidity? You guys can see if this wick right here is the sweep of liquidity beneath lows, here's the liquidity trap above highs for reasons as to why price could go higher. Here's the higher lows after the sweep of liquidity. I took my Fibonacci from the higher low to the high that would broke market structure. Okay, you guys can see that these market structures were broken and violated, and you guys can see that my entry was all right here in this general vicinity at 161.604, and I made roughly about $1,000 on this trade, easy in and out of the market. And you guys can see that I also sent them a screenshot of my technical analysis, and I had highlighted with a green line the 161.800 level ahead of time. You guys can see that the 161.800 level was met to the T. Okay, this was a high reward, lowish trade based off of the higher time frame confluences being in tandem and fitting in place with the lower time frame price action. Understanding bullish order flow, understanding when shifts in the market happen based off of structure and structure alone. You guys can see that I do have some indicators on my charts that I go into an extreme detailistic perspective on how to use in the CYPRX course material. However, I personally don't really use indicators on my trading. I trade with naked price action. You do not need anything in the market to be able to determine what the market is going to do next except for price action. Price action is the best indicator that you can provide yourself with based off of current market information and being able to react to that to determine what's going to happen next in the market. Again, nothing is guaranteed in this market, but we can give ourselves a higher probability for a trade to go in our favor based off of some of the certain things that I teach you guys on this YouTube channel. In and out of the market, and if you measure from time of entry, again, understanding what trading was really meant for, guys and gals. This market, if you're still listening to this trade breakdown, is so saturated. Everybody has it out in their minds that they're going to jump into this market and become millionaires overnight. This market is not meant for that. It is meant for you to be able to supplement your income in the form of time. Think about it. I made, let's measure this out, $1,000 if I entered here in this price leg, all the way up until when price came into 161.800, that made me $1,000. That is 1 hour and 37 minutes. So I made pretty much $1,000 an hour. If you think about that in the term of a 9-to-5 job, how much money from a minimum wage perspective it takes somebody to make $1,000, it is well over 40 hours a week. With that being said, think about that when you come into these markets with the logical approach. What I was able to do in 1 hour and 35 minutes based off of 6 years of technical analysis studying that I did in this market to give myself an edge and create a trading group and a trading regime that gives me a well-defined, high reward, low risk trade. I've created a trading community that simplifies all that. And instead of spending the 3.5 years that I spent sifting through technical analysis and paying enormous amounts of money for trading gurus that taught me nothing but support resistance methodologies, order block trading, trendline trading, bullcrap that you can find for free on the internet, there's a CYPRX course that you guys can specifically go to and study and understand how to escape the rat race. This is not a get rich quick scheme right here, guys and gals. This is understanding how to free yourself from the matrix in the form of time. Understand, right? Showing you guys a screenshot how I made $1,000 in 1.5 hours. It is not to brag or boast. It is to show you guys that a normal average class individual has the potential to learn how to make money with a Wi-Fi connection simply based off of reading naked price action with no indicators on their charts, no price predictions, no nothing, just simple and sound technical, logical analysis in this market that gives yourself the best bang for the buck. Okay. You guys have the potential to do this as well. You first need to be able to believe in yourself. You need to be able to believe in whoever is teaching you this information, regardless if it's you choose me here at CYPRX or you choose somebody else. And then you have to have the ability to apply the information that you are learning. Guys and gals, it is that simple. It is not guaranteed, but with a sound and logical approach to this market, you can come out on top. And instead of thinking like everybody else on YouTube that you're going to become an overnight millionaire, if you have a realistic and logical approach to this market, you can definitely free yourself from the 9-to-5 way of living. Simply by making $1,000 in an hour can free up a lot of your time. Think about that next time you approach these markets, or next time you watch some bullish Moon Boys price prediction telling you guys that, XRP is going to go to $1,000 next week or whatever the case may be. Think about what these markets were really designed for and why we actually have access to them. Blessings to you guys all. I appreciate the love and the support. I apologize for the rant towards the end of this video, but man, it just heats me up when I see people come into this market and they think they're going to get rich overnight, right? Even me here showing you guys how I made $1,000 in an hour, that is chump change compared to what you can have access to in this market once you grow a portfolio and you start understanding percentages, right? $1,000, if you have a $1,000 portfolio, 1% of that is $10, right? But if you have $1 million portfolio, 1% of that, again, this is a strategy that just showed you how to make 1% on any given trading day based off of sound technical analysis. Okay, 1% of $1 million is a lot more than $10, guys and gals. So think about that next time you approach these markets. Blessings to you all. I appreciate the love and the support. Smash that thumbs up button, subscribe to the YouTube channel, reach out to me, schedule a Zoom call if you guys have interest in the technical analysis mentorship. The link is in the description down below for both our website and our email, where you guys can reach out to me at any given point in time. I usually respond back within 24 hours. I've had a lot of people reach out to me lately and schedule one-on-one Zoom calls to ask about the course content, which is absolutely outstanding. It shows that people are really soaking up this information that we are providing here on YouTube. As always, stay cognizant, be aware, and I will see you guys on the next YouTube video breakdown.
Stop till I hear him say